This is VeriScope News. Our focus is verified data and clear context. Each update examines official economic releases using neutral language and documented numbers. Today's briefing reviews the latest weekly fuel price update from the United States Energy Information Administration. The release is titled Gasoline and Diesel Fuel Update. This report provides the national average retail prices for regular gasoline and on-highway diesel fuel. These prices represent retail estimates for the United States based on Monday market observations. The report is published on a weekly schedule and is typically released on Tuesday morning around 10 o'clock Eastern Time. Fuel price data remains one of the most widely followed indicators within the U.S. energy system. These prices affect household transportation costs, freight logistics, and operational planning across multiple sectors of the economy. This report presents the latest figures, explains how the data is constructed, and places the weekly changes into broader context. Fuel prices are a visible part of everyday economic activity. Gasoline prices affect private transportation for households. Diesel fuel prices influence trucking, rail transport, agricultural machinery, and shipping operations. Because of these connections, weekly fuel price data is monitored by businesses, transportation operators, and economic analysts. The Energy Information Administration maintains a consistent reporting schedule to track these prices across the country. The agency publishes weekly average retail estimates for gasoline and diesel using a standardized survey system. These estimates provide a national snapshot of fuel costs at retail stations. The report also includes regional averages. These regional breakdowns allow observers to compare price patterns across different parts of the country. Changes in these numbers can reflect shifts in crude oil markets, refinery output, distribution logistics, seasonal demand patterns, or inventory levels. Weekly data does not measure long-term trends by itself. However, when multiple weeks are observed together, the data forms a timeline that helps analysts track price direction. This update focuses on the week of March 2nd, 2026. The prices in this report represent Monday retail estimates. According to the Energy Information Administration, the national average retail price for regular gasoline increased during the most recent reporting week. For the week dated March 2nd, 2026, the U.S. average for regular gasoline was $3.01 per gallon. The previous week, dated February 23, 2026, reported an average price of $2.93 per gallon. The difference between the two weekly values is 7.8 cents per gallon. This represents a week-to-week increase in the national gasoline average. The EIA table does not list a revision for this value. The update also reports the national average retail price for on-highway diesel fuel. For the week dated March 2nd, 2026, the national diesel average was $3.89 per gallon. The previous week's value was $3.80 per gallon. The difference between the two values is 8.8 cents per gallon. The report also provides regional detail. These regional figures show how prices vary across different parts of the country. For regular gasoline, the East Coast region reported an average price of $2.88 per gallon for the week of March 2nd. The previous week's value for the East Coast region was $2.83 per gallon. The difference between the two values is 4.8 cents per gallon. Within the East Coast region, the EIA reports three sub-regions. The New England region, also known as PAD 1A, reported a gasoline average of $2.87 per gallon. The previous week's value for this region was $2.85 per gallon. The difference between the two values is 2.6 cents per gallon. The Central Atlantic region, known as PAD 1B, reported a gasoline average of $2.96 per gallon. The previous week's value for that region was $2.96.2 per gallon. The difference between the two values is 0.5 cents per gallon. The lower Atlantic region, identified as PAD 1C, reported a gasoline price of $2.83 per gallon. The previous week's value was $2.74.8 per gallon. The difference between the two values is 8.2 cents per gallon. Diesel prices also show regional variation. The East Coast diesel average for the week of March 2nd was $3.92.4 per gallon. The previous week's value for the East Coast region was $3.84.3 per gallon. The difference between the two values is 8.1 cents per gallon. Within the East Coast region, New England recorded an average price of $4.31.4 per gallon. The previous week's value in New England was $4.20.1 per gallon. The difference between the two values is 11.3 cents per gallon. The Central Atlantic region recorded a diesel price of $4.11.2 per gallon. The previous week's value was $4.10.4 per gallon. The difference between the two values is 1.8 cents per gallon. The Lower Atlantic region recorded a diesel average of $3.80.8 per gallon. The previous week's value was $3.70.8 per gallon. The difference between the two values is 10 cents per gallon. The weekly fuel price report has been published by the Energy Information Administration for several decades. The purpose of the report is to provide a consistent national estimate of retail fuel prices. Retail prices differ from wholesale prices. Retail values represent the price paid by consumers at service stations. Wholesale prices represent the price paid by fuel distributors before retail sale. Therefore, retail prices include additional costs such as distribution, retail operations, and local taxes. The EIA collects fuel price information through surveys of retail stations. The agency then calculates a national average. Regional averages are calculated using similar methods, but applied to geographic divisions known as Petroleum Administration Districts, often abbreviated as PAD regions. The East Coast region is designated as PAD 1. This region is further divided into three subregions. New England represents PAD 1A. The Central Atlantic region represents PAD 1B. The Lower Atlantic region, identified as PAD 1C, these regional categories help analysts monitor fuel distribution patterns along the eastern United States. Fuel prices can differ between regions due to multiple structural factors. These include refinery capacity, pipeline availability, shipping access, storage infrastructure, seasonal demand patterns, or inventory levels. Weekly data does not measure long-term trends by itself. However, when multiple weeks are observed together, the data forms a timeline that helps analysts track price direction. Fuel prices are used by multiple groups across the economy. For households, gasoline prices influence transportation spending. Most households rely on personal vehicles for commuting and daily travel. Changes in gasoline prices therefore affect weekly household fuel budgets. Even small weekly movements can influence monthly transportation costs when repeated across multiple weeks. For businesses, diesel fuel prices play an important role in freight transportation. Diesel is the primary fuel used in heavy-duty trucking fleets. Truck transport is a central component of domestic supply chains. Retail goods, agricultural products, industrial materials, and consumer items often move through trucking networks before reaching stores or warehouses. Because of this connection, diesel prices are often monitored by logistics companies and distribution managers. Agricultural operations also use diesel fuel. Farm equipment such as tractors, combines, and irrigation pumps frequently rely on diesel engines. Changes in diesel costs can therefore influence operational planning for farms and agricultural service providers. Manufacturing facilities and construction operations also use diesel-powered equipment. Examples include generators, heavy machinery, and industrial transport vehicles. For these sectors, diesel price movements can affect operational expenses. In freight logistics, Fuel expenses represent a significant share of operating costs for trucking companies. Many freight contracts include fuel surcharge formulas. These formulas adjust shipping prices based on changes in diesel fuel costs. Because of this system, weekly diesel price data from the Energy Information Administration is often used as a reference value. The national diesel average provides a consistent benchmark that logistics firms can use in contract calculations. In addition to freight transport, diesel fuel is used in rail transportation and marine shipping. Although different sectors may use different pricing benchmarks, the EIA report still provides a general reference point for national fuel cost trends. Fuel prices also interact with broader energy markets. Retail gasoline prices are influenced by crude oil costs, refinery operations, distribution logistics, and regional supply conditions. Crude oil is the primary raw material used in gasoline production. Refineries process crude oil into gasoline, diesel, jet fuel, and other petroleum products. After refining, fuel is transported through pipelines, rail systems, shipping networks, and tanker trucks before reaching retail stations. Each stage of this system adds logistical costs. Regional fuel supply can therefore affect local price averages. For example, regions with large refinery capacity may experience different price patterns than regions that rely more heavily on fuel imports from other areas. Seasonal demand can also influence fuel consumption patterns. Summer travel periods often increase gasoline demand. Agricultural seasons can increase diesel usage. Winter heating demand can influence refinery production balances. These factors help explain why fuel prices change over time. Weekly reports provide the numerical record used to track these movements. Energy analysts continue to monitor several indicators related to fuel markets. One indicator is the weekly petroleum status report published by the Energy Information Administration. This report provides information about crude oil inventories, refinery utilization, and petroleum product stocks. Another commonly monitored indicator is refinery operating capacity. Refinery activity affects the production levels of gasoline and diesel. Pipeline flows and regional inventory levels are also monitored by energy market analysts. These indicators help explain supply conditions within the fuel distribution system. In addition to energy sector reports, analysts often monitor broader economic indicators that influence fuel demand. Examples include transportation activity, freight shipment volumes, and industrial production data. However, these indicators measure different parts of the economy and are published by different government agencies. The weekly gasoline and diesel update focuses specifically on retail price estimates. The next scheduled release for this report will follow the same weekly reporting structure. The weekly fuel price update provides a simple measure of national retail fuel costs. The numbers do not predict future price movements. Instead, they document the average retail prices observed during the reporting week. For viewers, the report serves as a reference point for tracking changes in gasoline and diesel prices over time. Households may use these numbers to compare local prices with national averages. Businesses may use the report as part of fuel cost monitoring and operational planning. Because the report follows a weekly schedule, it provides a regular series of observations that can be compared across weeks, months, and years. Observing the data over longer periods allows analysts to identify broader price trends. However, the weekly report itself presents only the official numbers for the reporting period. The Energy Information Administration produces the weekly gasoline and diesel report using a structured data collection process. Retail price information is gathered through surveys of retail stations and distributors. These survey responses are combined into statistical estimates representing average retail prices. The agency then publishes the results in a standardized table format. This format includes national averages and regional averages. Because the report is released weekly, it provides consistent intervals for observing changes in the retail fuel market. The standardized reporting format allows analysts to compare the latest values with previous weeks. This continuity ensures that the weekly report functions as part of a longer historical data series. Such data series are commonly used in energy market analysis and economic research. To recap the official Energy Information Administration update for the week of March 2, 2026, the national average price for regular gasoline was $3.01 per gallon. The previous week's value was $2.93 per gallon. The weekly change was 7.8 cents per gallon. The national average price for on-highway diesel fuel was $3.89.7 per gallon. The previous week's value was $3.80.9 per gallon. The weekly change was 8.8 cents per gallon. These figures represent the official weekly retail fuel price estimates published by the United States Energy Information Administration. This has been VeriScope News. Verified data, clear context.